All right, welcome to this market overview training. I will try my best to actually not just do an overview, my expectations for the week, but also bring in a concept to explain further what fair value gaps are and how you can trade off the fair value gaps. First of all, I want to commend all of you for the love shown so far, the subscriptions, the comments, the reactions, the good stuff you guys say about this channel. If you are joining us for the first time, you can do well to subscribe and share the videos as a way to appreciate our work right here. All right, so like our custom is, we normally start looking at DXY, which is the currency, the dollar index, and we understand that whatever happens to the dollar index, the opposite will happen to GBP, USD, Euro, USD, etc. So it is more or less like DXY, which is dollar index correlating with the inverse will be true of the foreign currency. So if your DXY is bullish, then expect GBPUSD, for example, to be bearish. If the XY is bearish, then expect GBPUSD, for example, to be bullish. And it goes on for every pairs that has the USD ending its pairs, like Euro USD, AUD USD, NZD USD, etc. Right. So usually, because of the importance of this correlation, I like looking at what DXY is doing generally and then transpose the idea to the other foreign currencies. So if you have been following for a while, you would agree that we've actually been bullish on DXY, and I'll go to the daily liquidity. Now, what's the trendline liquidity all about? Very simple concept. I believe we actually explained it in one of our recent videos here in this channel. Now, what that entails is that the algorithm that controls price seeks to take out liquidity. So price moves from liquidity to liquidity. Now, liquidity have various categories, and in our next video I'm going to actually explain more about liquidities, but one of them I like to see the most is what we call the trend line liquidity. What that means is, for example, price is bullish and then it has this sort of little movement that is looking like a trend line, like trend line traders would take this as a trend line, of course. Now, what price would usually do is that the beginning of the move, in this example, this low right here that started that trend line movement, price will seek to take it out and then continue being bullish. Do you understand that? Same way, if price is bearish, clear bearish momentum, and then you see price doing this little movement that looks more like a trend line direction to the downside. Some traders call it a descending wedge, whatever, right? The beginning of that move, the high of that trend line, price will break out from the trend line to take out that high, and then expect the bearish trend to continue. So they do that most of the times to gather contracts, to gather the orders, to induce traders into filling short or long position depending on the trend line created. Is that clear? So from DXY you can see something similar to that right here, and in one of our videos, think about some weeks back, we did mention that this looked more as a trend line liquidity, right? So the XY has been following or respecting that trend, and then we expect price to break this out as it's currently approaching, take out that beginning of the trend line move, and then continue the decline. Overall for the year, at the time I was recording, I am bearish on DXY, but I want to see them do this break and drop. Very important. Now you can see that more clearly in the weekly time frame, so I want to keep this video as short as possible. Right, now I was going to also talk about the importance of fair value gaps and how you can trade them, but before we do that, let's just quickly look at the analysis or the projection for the week for the XY. So currently you can see the market opened a couple of hours ago, and we can see there is a fair value gap right there that want to see the XY fill partially and then expand to take out that trend line liquidity. Now let me just put it clear because someone commented that he needs to understand what fair value gaps are and how to trade them. Now we have tons of videos in this channel, holistic teachings that talked about the various concepts that we use, the fair value gaps, the order block, and all of those stuff. So I expect you to watch that video. I will leave a link below in this description that will take you back to all of those videos. But for this moment, or for this class, the first thing to know is that fair value gaps serves like magnets to price. So once you're able to spot them in price action, expect that they will attract price to themselves. For example, you can easily know them within a series of 3 candles, where you have the first one, the second one, and then the third one. Now, how do you know a fair value gap exists in a series of candles? Is, for example, when the low of candle 1 and the high of candle 3, there seems to be a gap between the low of candle 1 and the high of candle 3 when you try to look at it through the body of candle 2. I'll take that again. Fair value gaps or market imbalances exist in a series of 3 candles called the candles 1, 2, 3. You will note an imbalance or a fair value gap when there is a gap, right, between the low of candle 1 and the high of candle 3, especially when you look at it from the standpoint of candle 2. So candle 2 is your reference point of noting whether there is an imbalance or there is a gap. Now this can be bullish or bearish, notwithstanding. Very quick example you can see right we are talking about. I'm going to zoom right in on current DXY chart and see what we just talked about in fair value gap. So for example, call this candle 1, call this candle 2, and call this candle 3. Now you can see between candle 1, 2, 3, they are following each other symmetrically or sequentially in an uptrend. Obviously, you can see that right there. Now there is the low of candle 3 in this example, that level, and the high of candle 1 in this example, that level. You can see in between the low of candle 3 and high of candle 1, there is this space right here. That space is what you refer to as your fair value gap or market imbalance. Now, the sensitivity in these areas varies from depending on what the market wants to do. Essentially, every fair value gap should be filled, but not filled up completely. So let me explain that very quickly. Now you have a fair value gap. Let me say this is a fair value gap in this high end to this low end. In any scenario, that's the fair value gap. Now, if price is returning to fill this fair value gap, whether price is bullish or bearish, there are 3 sensitive areas price must interact with. Now in this example above, we are bearish, we are bullish rather, price is just falling down, right, to fill up the fair value gap. Okay, just give me a moment about to fix that. Right, so price is coming down to fill the fair value gap. Now what you expect is that because price come to fill the fair value gap in this particular example, it has to either interact with this beginning of the fair value gap or the midpoint, what ICT calls consequent encroachment, or the end of the fair value gap. So you should expect sensitivity of price either at the beginning. So price can come to the beginning point and expand. It can move all the way to the midpoint and then expand. It can move all the way to the end point and then expand. Do you understand? And if it's a bullish scenario that price is returning to a fair value gap, it can react from the beginning point and decline, or the midpoint and decline, and then fill it all completely and of course expand to the downside. So that's something to note about fair value gap, and it's very, very beautiful to observe. Again, we have a whole teaching relating fair value gaps and how you trade them. So essentially, this is what we're looking at for DXY. We want to see price fill that fair value gap to those any of the area of sensitivity from that area, and then expand to take out our liquid. So we're going to have mini bearishness for dollar like we are seeing at the moment, and then overall we'll be bullish for the week on DXY. Please take note of that. Now again, these are not financial advice. The market can still do what it wants to do, but with all of these, the hopes is that it will help train your eyes to start seeing the market from another perspective. And if you want to get zeroed in, you can now go to the 1 hour. So essentially I do the daily, then the 1 hour, then 5 minutes for your entry, 5 or 15 minutes for entry, so you don't have to toggle through and through. Now there is another form of fair value gap that we refer to as volume imbalance. Volume imbalance, it's a form of fair value gap when that occurs when the market just opened or during news release. And how do you note this? Right, it's like you can see I marked it up already right there. Volume imbalance, again taught in our other extensive video, occurs either during news or during the market open. So what normally happens is that the close of a candle, usually every new candle should open where the previous one closes. But when that does not happen, either due to a news release or due to a market open, like you can see at the moment, it will lead to volume imbalance. So there is a space, obvious visible space that exists between two candles. Fair value gap will need 3 candles to note out. Volume imbalance will need at least 2 candles to note out. So you can see this market opened right there and then it jumped like a gap, right? So that's the volume imbalance, and it works like a fair value gap. It will magnet price to itself to fill it up before it continues. In the same way, a fair value gap will fill up, right? So this is the 1 hour chart of the XY. I just took at that time to explain to us what volume imbalance is. Now in the daily chart, we already have all of this area marked at as our fair value gap. So we want to see dollar fill this area either completely or partially, as the case may be, and then expand. So I would rather wait to see this bullish move begin before I start trading. All right, you would actually be more profitable trading with the trend than against the trend. Please take note of that. You'll be more profitable trading with the trend than against the trend. So finally, let's check DX GBPUSD. Someone commented GBPCAD the last time. I will just do something about GBPCAD. I usually don't trade GBP CAD apart from GBPUSD and Euro USD. So let's look at GBPUSD and see what we can flesh out from there, having this DXY concept in our mind. So DXY is bearish temporarily and then to become bullish for almost all of the week, right? So we expect that GBPUSD will be bullish temporarily and then bearish almost all through the week. So this is the hourly chart for GBPUSD. Let's just complete the snake, begin from the daily chart and just get those levels marked out already, right? So this is GBPUSD, the daily chart or the daily time frame. You can see already it's already looking like what we saw in the DXY, but the opposite direction. It's like an inverse of what you see. So I'm first of all marking out the fair value gap from GBPUSD. Now this is actually the fair value gap that we can see right there. Okay, so I want to see GBPUSD fill that gap, right? Now it can again fill it the way we explained in DXY. Can be temporal fill or a total fill. So I'm going to evaluate the range and mark out the 50% level with my fib tool. Mark out the 50% level because price can actually fill any of these areas, the beginning, the midpoint, or the entire range. So whichever, I will be ready to strike for myself. Now, one of the things that will help you with your entry is understanding the time versus price model. All right, the time versus price model. So this is GBPUSD. The time concept is that you're going to get your best trade opportunities during the London Open or during the London session. All right, so you should be trading GBPUSD during London session. All of what we just mentioned, expect the activities during London session, and that will be around, if you're Nigerian, between 8 a.m. to 11 a.m. GMT +1. All right, so if you're not Nigerian, you can use the time I just mentioned to convert to your country time. So Nigerians, 8 a.m. to 11 a.m. GMT +1, the first 3 hours of London Open, or you can rather wait till the first 3 hours of US Open, that is 1 p.m. to 4 p.m. GMT +1. So whichever that floats your boat, depending on where you reside, that works perfectly as well. All right, but if I'm going to come from a liquidity concept, pure liquidity concept, I would want to see price really take out that high, right? Take out that high, and if it's going to expand, I am putting in mind, I'm putting into consideration all of this fair value gap range that we have marked from the daily. So if I am going to buy or sell off that high, all right, I would rather want to sell off from the midpoint of the fair value gap, the 50% level, and my stop loss should usually, or your stop loss should usually cover all of the fair value gap. Look at the left. I am looking at where that gap ends, right? Look at that area. I'm looking at where the gap ends, so my stop loss should cover for that from for that area. And then my take profit would actually be a nice 1 to 3 is fine, 1 to 5 is okay depending on your risk appetite. But because I am looking at a huge bearish movement, I can actually do a 1 to okay, I think first off, you can actually want to get where you expect price to sell all the way down to, and it will help you. But at this case where there is nothing really to the left to pick out from immediately, then you can do your standard 1 to 5, right? I do like 1 to 3, 1 to 5 depending on the market condition. So I'll do 1 to 5 here, and by 1 to 5 about 50% of my positions will be off, right? And this is exactly what I'm looking at. Now we understand that price would not just one thing about trading is patience. So price will do that and drop and then pull back again to scare out weak traders and drop. So you want to actually be patient. You want to be very, very patient with your trade. Unless your stop loss is hit, you have not lost the trade, but ensure. All right, so that is very, very clear with what we are looking at. I said I was going to conclude with GBPCAD just because someone requested that in the channel. And again, please expect my next upload on pure liquidity trading. It's going to skyrocket the results that you get and will increase your profitability. So very quickly, what can I see from GBPCAD? It's looking more like the GBPUSD to me. I think I will just do the 4 hour and 15 minutes, so I would keep this very short. Okay, so from the 4 hour, clearly we are bearish. We're looking bearish, right? Just because we've had the break of market structure. We've had the break of market structure to the downside. By that I mean we have what I like to see a lot, a sweep and a break of structure to the downside, that level broken out, and then we've had a very good price action taking out that high. So you see price rally took out that high and it has taken the respected low. So we're bearish on G card, and where am I expecting price level or price action next? Obviously we have known that price moves from liquidity to liquidity. So what's the next level of liquidity I'm seeing at the moment? I'm seeing that level, and if it gets very excited, this level, something I wanted to talk about, but it goes to be our next video on what to do when you have long weeks like this. Usually you want to evaluate, that means get the 50% of every long weeks, especially weeks that are at external levels like highest levels or lowest levels. Long weeks should be evaluated. The 50% of those weeks should be treated like a fair value gap, because price have that level, or the 50% level of every week is very, very sensitive. So I'm going to do a whole teaching on that in subsequent videos. So for GBPCAD, this is the next level of liquidity. I just, okay, let me put a trend line right there. So I would be looking to sell and take profit right at that level, and then from there on, you know what you want to see what price wants to do going forward. And let's head over to 15 minutes charts and see what price is most likely to do. It's looking beautiful from liquidity to liquidity. So they have run this low all the way and broke market structure right there, and pulled back to form a high, and that high is very important for the next move or leg lower. So I want to see price take out that high and then expand lower, just like we're expecting for GBPUSD, right? And I'm not surprised because sometimes they will move together. So I want to look out for sales in that area. Stop loss should cover the next high, and I should be offloading my sales right there at a nice 2.8 risk to reward ratio. Now I'm doing this very short one so you can actually have a way, probably pick my brain on how this setup looks like. And I would encourage you, whether you see this video in time, this is 11th September 2023. Please look out for this trade, how it plays out during London session for the day. And should it play out nice? Should it not play out nice? Because that's something about the markets, about having a healthy psychology and sticking to your edge, right? So is there something else I can see there? Nothing for now. So please look out for my next video where I'll be talking extensively or exclusively on market structure and liquidity, right? If you are new to the channel again and you found some valued information here, please do well to subscribe, share with your friends, and that's the way you encourage me. And for all of you who have been signing and doing all of the good works, I actually commend you. All right, so have a profitable week, trader. Remember the long-term view we have for the week and make the most of the market. I'll talk to you later in the week. Joe Coley signing out.